Did you know that there's actually a science to figuring out how much life insurance you need on your life? It's not just, I want a million because it sounds good. There's actually a formula to figuring this out. My name is Amanda Ryba. I've been a licensed financial coach and consultant for the past 8 years as of the date this video was produced. And it is my goal to illuminate to the world what wealthy people know and understand about money. And one thing all wealthy people get is the power of leveraging life insurance to protect their family if they were no longer to be here. And they understand this formula. This formula is going to tell you exactly how much life insurance you need and not a penny more. And it is called D.I.M.E, debt, income, mortgage, and education. Now let's break this down. D stands for debt, meaning how much you currently owe on credit cards, student loans, car payments, and any personal loans that you may have taken out or business loans. I stands for income. What is your current take-home annual income? You want to multiply that out by 10 years so that if anything were ever to happen to you, your family could continue to survive and sustain the lifestyle they're used to living today for at least 10 years or longer. M stands for mortgage. What do you still owe on your house or your rental properties? You put that number there. And then E stands for education. Do you believe, if you have children, in helping send them off to college and pay for that financially? If you do, you'd want to take an estimated average cost per year of college, multiply it out by 4 years times how many kids you have, and you can put that number there. Just for a general rule of thumb, I usually tell my clients to factor in about $40,000 per kid per year for college. Now let's fill some numbers in. Let's say for debt that you currently have about $15,000 in credit card debt, that you owe $30,000 on your car, and that you only owe about 20 grand on student loans. Let's say your current take-home income is about $80,000 a year times 10 years. So that number is going to be $800,000 on that line. Let's say that you owe about $750,000 on your mortgage. And let's say that you only have one kid. So you can factor in $40,000 a year for 4 years for that child, which is going to bring you to about, what is that? 320,000, give or take. So this is going to essentially tell you how much life insurance you need in total to protect your life if anything were to happen to you. Now, you could be looking at this big whopping total down here and think that that sounds quite extreme, right? That sounds like a lot. But there is actually a way to break this down where you can keep it really cost effective and it doesn't cost you an arm and a leg to protect your family. There's a difference between what we call term and permanent life insurance. So term insurance, it's temporary. It's only going to last you for a certain amount of years. It's really best for people that are in their mid to late 20s, 30s, 40s, 50s, and sometimes in their early 60s. It's designed to give you a lot of life insurance for a very small cost per month. And it's designed to protect you during the most vulnerable years of your life while you have a young family, while you have people dependent on your income, and while you still have a lot of debt. So it's cheap, but it's not going to last you forever. It's going to expire at some point. Kind of thinking of it like you are renting your insurance. Then you compare that to permanent life insurance, where it's going to last you for as long as you live. Now, this is going to be more expensive, so keep that in mind, but it's insurance that you know will always be there and will never ever expire. Now let's go back to our breakdown over here. Not every one of these categories has to be covered by permanent life insurance, which is what people tend to think, right, when they see this breakdown. So let's talk about it. Your debt, that is actually something that you shouldn't have forever, right? You should eventually be paying that off. So debt can actually be covered with term life insurance. And then your income. Is your income something that you need forever? Like, do you forever always need income coming in, or can you survive without that? Obviously, you need income coming in, right? So that's going to be permanent. You're going to want to replace that with permanent life insurance. And then your mortgage. Are you going to have your mortgage forever? Hopefully not, right? So that can be replaced with term life insurance. And then education. Again, not an expense that you're going to have forever. It can also be replaced with term insurance. So if you look at this, your debt, your mortgage, and your child's education can all be replaced with term policy, which is much more affordable. And really just replacing your income is what you need to focus on when it comes to permanent life insurance. hopefully this helps. I think it's always great to go out there and get as much life insurance as you possibly can, but we do want to make sure that you know that there's actually a formula to figure out how much insurance you need. It's not just, I'm going to get $1 million because it sounds good. Although, keep in mind, $1 million in life insurance today isn't going to have the same value as $1 million in life insurance 30 years from now, right? Because we have to factor in inflation. So when you are calculating out how much insurance you need, always keep inflation in mind. And remember, there's no such thing as having too much life insurance. But we do want to make sure that we keep the costs down and that we focus on what fits your budget, so you're not looking at it as an added expense, but you look at this as something that's important to protect your family if you were to get sick, injured, or worse, pass away too soon. So again, hopefully this helps. I love it when you stay till the end, so please share this video with anyone that you can think of that is currently trying to figure this out and figure out how much life insurance they actually need. And if there's anything that you have questions on, please drop them in the comments below. We put a new video out every single week, so if there's ever something specific that you want to see or learn more about, we're happy to cover that in one of our upcoming videos. As always, I appreciate you. If you like videos like this, click that subscribe button and click that bell to turn on notifications, because again, we release a new video every single week. So until then, this is Amanda Ryba signing off, and I'll see you again next week.